Hello, Jay. It's nice to talk to you today.
How are you doing, Cash Cow?
Yeah, we saw a roller coaster in the stock market this week with the CPI and PPI data release and FOMC and J-Pulse talk. So it seems that the stock has jumped because of the cool inflation. So what do you think will go next of the stock market? Will the stock market continue the rally or it will stop?
Well, PPI data certainly came in cooler than expected. That's helped put pull rates down a little bit, which was obviously one of the potential headwinds facing bulls in this market. But Fed meeting itself wasn't particularly of interest because there was one thing that Powell and company was trying to do. They were trying to get everybody on the same page. They had last updated their summary of economic projections and dot plots in the March meeting. It's been a couple of months of data since then, obviously. A lot of it mixed. You had that cooler CPI and PPI number this week, but don't forget last week we had that real strong jobs number. So basically, what the Fed wanted to do was get in alignment with what its commentary had been the last couple of weeks, which was that they could see maybe one rate cut given the data that's come in, whereas the dot plot and summary of economic projections had been showing three rate cuts. So the key for
Yeah.
Powell was to adjust those outlooks to get it more into the 1-2 rate cut camp without disrupting the market. And I think he did a pretty good job at it. So Fed, we get to get past that, and it's a relative non-event. So now the trend, I think, will continue to hold steady, where we see a little bit more of a push higher going on here. We're seeing a little bit of an intraday reversal, and we'll get into that in a couple minutes here. But for now, I do think that the upward trend is in place. The next big catalyst for the market is going to be Q2 earnings, and we'll talk about that in a little.
So the dot plot seems a little bit hawkish comparing with a previous dot plot when there are some Fed officials predict three rate cuts, but from the yesterday's dot plot, nobody predict three cut, and most people will vote for the one cut. So that seems a hawkish turn from the FOMC.
Oh, it was definitely hawkish on the surface in terms of a comparison to the March projections. But again, it was more about realigning the market with recent commentary from the Fed. And I think that they accomplished that.
Got it. And also, I saw the news that corporate buyback will end this week by Friday. And from next week until the next earnings, there will be quiet period. So as a buyback stop, maybe the stock market rally will also pause.
That is certainly a near-term threat for the markets. Obviously, that's a big buyer out. We've had record share buybacks over the last couple of months. I think year to date, it's running at a record level. JP Morgan would be a good example of what happens when a company stops buying its stock. You can tend to see it float a little lower. So it'll be interesting to see how much of an impact that has. What it could do is lead to a little bit more choppier conditions going into Q2 earnings, but I don't think that we will see equities decline aggressively because of that buyback, but it will have us watching support levels a little closer just to see if there are defenses around it.
Got it. So, Jay, any interesting stocks you are watching now?
So SMCI is a name that I went long this morning, Super Microcomputers. So that's one name that I've got on my radar. Certainly watching these AI plays here as they continue to see a big boost. It's going to be a big event tomorrow that people are going to need to keep an eye out on. One of the more interesting aspects of this move this week, coming into the week, the big question was what's driving the market? Is it the Fed or is it AI? And I think we really got that answer when you take a look at things. You just kind of saw the AI names, Apple after its WWDC, Nvidia after its stock split, Oracle, another key driver in the market. They all really ran things higher. And so One of the aspects of that, though, is the call activity around Apple and nvda on Tuesday. That was 20% of the entire options market, and that was for calls that are coming due this Friday. So we're going to have to keep a close eye on that space this week just to see what kind of impact when those calls expire it's going to have on the broader space. We saw a little bit of a reversal going on in the backdrop here today in front of that event tomorrow, but it's going to be something for people to keep an eye out on. And then obviously we'll be turning our focus on the AI space going into Q2 earnings. So that's going to be a big event this Friday for market participants to watch, see if there's any weakness in the space. But as we've been seeing, anytime there is weakness in that space, people have been jumping in to buy the dip. So it's going to be something for us to watch.
Wow. Nvidia and Apple has a big rally this week. It's now around 3 trillion. It's
yeah,
or
you can see. So it was able to regain second from nvda this following its news, but a lot of people see Apple as underowned by institutional investors. You know, that nice little run. Obviously, we'll have about 5 weeks from now. People will be watching the iPhone sales for China just to see how that's unfolding here. But you know, a lot of people saw Apple as underowned, and you're really seeing that play out with this rally that we've got going on this week.
Yeah, interesting. And as the Fed that they will have one rate cut this year, do you think it's time to buy TLT because the rates go down and maybe it's time to build a position?
TLT is interesting. I think in the short term, you can buy TLT. One big thing you want to watch, of course, is the 30-year bond auction that's going to be going on at 1 p.m. Eastern today. We saw a strong air sale on Tuesday. That was obviously a positive for the markets and helped to reduce rates. But one of the key aspects for that backdrop is we, of course, had the European elections on Sunday, which led to Macron calling for a after his party got beaten up pretty good in the polls. And what I think that's led to is a little concern and uncertainty around which direction Europe's going, which is leading some people into buying treasury bills here in the US for safe haven buying now. Certainly some deflationary data, some weaker growth numbers should continue to pressure rates lower. If you over in Europe, then people could start buying these treasury bills in the US. So I think it makes for a good swing along, but the US has its own uncertainty, of course, lying ahead with those November elections. So I do see TLT as a good short-term buy, but you know, I don't know upside there's going to be in it.
Got it. So Jay, I read one of your article talk about that analysts see that the SP 500 will reach 5,500 by the end of the June. What do you think about that?
Yeah, I mean, we're not from it right now, right? So certainly the stock buyback item, that's something that we'll have to see how these AI stocks, which have been leading the markets, will they rally following that options expiration? I think that they will, especially going into earnings where people are going to feel that that's going to be a pretty good number. Pre-announcements, that'll be another key aspect to follow for the markets, where we are going to be looking to see if companies come out with warnings about their Q2 performance. On the surface, it doesn't seem that's going to be the case. So if expectations for Q2 earnings are fine and people aren't seeing too much margin compression, then yeah, I think we got a real good chance at getting to 5,500 in the S&P at some point before the end of June.
Wow.
I mean, we're only at this certainly in a firm upward trend. We just put in a flag pattern here over the last couple of weeks. Now we're edging high 20-day moving average. We're testing the up to the Bollinger Band in the S&P charts on the daily. That's right around this 54.30 area. It wouldn't surprise me if we got a little bit of a pullback to test the 20-day, which sits at 53.35 right now. But I would think that that would hold up, and that, yeah, we've got a very possibility of hitting 5,500 in the S&P by the end of June, given the trend.
Last question, Jay. So what would you suggest for like investors, our viewers, to pay attention when they are investing in the summertime?
Well, you obviously have lower volume, which could lead to higher volatility. The upward drift, a lot more people are on vacation naturally, kids are out of school, things of that nature. August is always a month because Europe is quiet at the point, as is the States here. But then, as you get into summer, you usually start getting that roll going into September. You have the money market fund um, tax loss harvesting that's going on around that point. A lot of money market funds end dates are October 30th. So you usually tend to get a bit of a market swoon after that summer rally. And especially with the November elections on tap and a lot of uncertainty about which direction we could go, I think that could be emphasized even more. But in general, the big item for the markets this summer is going to be that Q2 earnings season. How strong can companies report? We've seen a lot of weak guidance around Q2. So, there's going to be low into it. Gross margins will be closely followed just to see if this pullback in pricing power that a lot of companies are seeing, how that impacts that margin overall. That will naturally factor into overall valuation for equities. But what I'd be looking for, general pathway, is for us higher into the end of June. Then expect to see something in front of Q2 earnings season. Then we'll let Q2 earn. That'll be the big factor in terms of how we'll go through for the summer. I do expect earnings season to perform just fine, which should again lead to an upward drift going in through the middle of August. But then that's when we usually tend to a little bit of a roll from middle of August into November, and I think that's a very likely chance that happens. So that's kind of how I see things rolling out. But Q2 earnings is going to be huge for how we perform this summer.
Got it. Yeah, thanks, Jay, for the insights. I think our viewers learned a lot and really appreciate that. And yeah, look forward to talk next time.
Thanks for having me on, Cash Cow. Look forward to talking with you again.